All right, joining us tonight, Andrew Berkeley. He joins us to talk more about the fourth quarter earnings season and the impact it might have on the market. He is a portfolio strategist at Oppenheimer and Company. Welcome. Nice to have you with us, Andrew.
Hi, Sue. Welcome. Thank you.
Overall, what kind of a season do you think it's going to be? There's been so many cross currents between lower oil prices, the higher U.S. dollar. How's it going to shake out this time around?
Yeah, I'm expecting a pretty wide range of results, meaning that if you look at analyst consensus, they're only looking for about 1% growth in the S&P 500, which would be the lowest growth rate since the third quarter of 2012. If you take out energy, it's a little bit better. It's about 4%. But if you go down at the industry level, what we're going to find is a really wide disparity between the losers of the earnings season, energy and energy-related ideas that are going to be down well in excess of 20% in terms of earnings growth. But on the other side, you're going to have a lot of positives, which are, in technology, healthcare, consumer discretionary. You're going to see a lot of double-digit earnings gains. So for one quarter in quite a long period of time, I think you can see a very big disparity between industries and stocks, for that matter.
Do you think, Andrew, that the forecasters who see 1% earnings growth and only 1% are being a little too dour?
Yeah, Tyler, I mean, as you know, it's really about the level of growth, and it's also about the expectations going into the earnings season. So we've seen those numbers come down by about 6% during the quarter, which is pretty pessimistic. We think the bar is pretty low at this point. So non-energy earnings should be able to surpass those results pretty easily. And most importantly, we think the guidance is actually going to be pretty upbeat, given the better economic and macro data that we've seen coming into the beginning of the year.
But what about the strength of the dollar? For those multinational corporations, might it be a bit of a headwind this time?
Yeah, the other big theme is definitely going to be the currency. So certainly the dollar's been very strong. That is going to be a headwind for companies that derive a lot of their revenues overseas. It'll be more of a benefit for those domestic-oriented companies, especially those with lower input costs from commodities, where the higher dollar is actually keeping commodity prices down. So it should be a bit of a net-net. In aggregate, the S&P 500 derives about 70% of its revenues domestically and about 30% overseas.
So, Andrew, let's bring it to round third base and bring it home. Are earnings at this level high enough to sustain and justify stock prices at today's levels?
Yeah, just about. Valuations are definitely at the high end of the range. We've seen some volatility coming into the year. If we have 3 or 4% earnings growth at the end of the day, that's not enough, I think, to support the multiple. So that's going to have to accelerate in forward quarters. So we're going to have to hope, if we do have a bit of a stumble, it is a temporary event and we get back onto a stronger earnings trajectory as we move through the year.
All right, Andrew, we'll let you go. Thank you so much. Andrew Berkeley with Oppenheimer and Company.